Hi, everyone, and welcome to our webinar this afternoon, where we are going to do our best to demystify EU VAT for you. My name is Alex Wyatt, and I head up our partnerships team here at Simply VAT. I'm just going to cover off a few housekeeping things for you all to start out with. So first off, on the right-hand side of your screen, you're going to see a chat function. So you can just say hello, or if you have any questions throughout the presentation today, feel free to pop them in the chat and we can answer them at the end should we have enough time. You'll also be able to watch this video back on demand. So we're going to be sending out a link to you afterwards, so you can share it with your colleagues, or you can save it for later just in case you found anything super useful that you want to go back to. Additionally, this is the first webinar in our series for us, and we're going to be covering a few more topics such as B2B transactions and the 13th directive reclaims, as well as the import one-stop shop scheme. So our next webinar is going to be coming up in February, and there's actually a link in the description here below where you can actually sign up right now, or again, afterwards, we'll send you a link so you can sign up. So today I'm joined by my colleague Paulina, who is our VAT consultancy manager here at Simply VAT. So welcome, Paulina.
Hi.
And we're going to kick us off here. So to start off with, I just really wanted to talk a little bit more about who we are at Simply VAT. So we specialize in international VAT compliance for businesses trading cross-border into the EU, Norway, and Canada. We just celebrated our 10-year anniversary recently, where over the last decade, we have helped thousands of businesses with their VAT registrations, ongoing VAT returns, the changes in rules surrounding Brexit and the EU VAT reform, as well as 13th directive reclaims in multiple EU member states. And over the years, we've partnered really well with accountancy firms who traditionally look after all of the domestic VAT and accounting, where we provide support with only that international VAT and the international VAT expertise. So if you have any questions about partnering or how we can help your clients, we're happy to discuss with you further after today's presentation. So without further ado, I'm going to hand over to Paulina, who's going to kick us off today with our topic. Thanks, Paulina.
Thanks, Alex. So I hope I'm going to be half as eloquent as Alex, so thanks for that. So when is a registration required for supply of physical goods? That's our first topic. So I'm just going to let Alex switch the slides. Thank you. So we have to ask ourselves a few questions, whether you are selling on a marketplace or not. Okay, well, you as the retailer, obviously. So the first question is, if you're selling on a marketplace, because that's our scenario, then we have to ask ourselves, is my business established in the EU or not? Okay. If the business is established in the EU, then the business that is making the sales is responsible for the VAT on the supply of goods. Now, if the business outside of the EU, and that includes also UK or Switzerland, then it will again depend on various things. So usually we're going to ask ourselves, what are the goods firstly? Okay, are the goods fulfilled from inside of the EU? If they are fulfilled from inside the EU and you are a EU business, then non-EU business, then Amazon is responsible for the VAT, but the local registration still might be required. It will all depend whether you're holding stock and making any other transactions. Now, if the goods are not coming from the EU, let's say you are non-EU business, so UK business, and your goods coming from the UK to the EU. Now, next question will be, what's the value of these goods? Okay, so consignment value rather than goods themselves. So if the consignment is above £150, then euros, sorry. Then if the consignment is above 150 euros, then the seller is responsible for the taxation, for the import. Normal procedures apply. If other way around, if they are less than that, then Amazon will be the one responsible for collecting the VAT. Now we have to move along to what happens if you have your own website. Okay, so it's literally The same scenario, is your business established in the EU? No, they're not, because if you are, then obviously, as with Amazon, you are responsible for all your sales. So if you are a UK business, for example, and you fulfill the goods from outside of the EU, then again, we look at the value. If the value is above 150 euro per consignment, then normal customs procedure will apply. And you have to choose who is the importer of the good, how you're going to import them, Incoterms, duties, everything around that. And if they are below 150, then you can register for IOS. But you still have to be responsible for the VAT. So IOS is one of the simplifications for that. If the goods are inside of the EU, you need to register everywhere where you dispatch your goods from, okay? Mostly anyway, and you have to know whether you're selling to private individual or businesses, because that might affect where else do you need a registration. If you're selling B2B, fine, you can use the reverse charge, intercommunity supply, that's great. One registration might suffice if you have goods in one place. But if you are selling to private individuals all across the EU, then you have to register either for the OSS or in every country where your customers are, but that's usually not an option for businesses. So let me talk about Union OS a little bit, okay? So for non-EU established businesses, because that's what we talk about, it will cover the sale of goods located in the EU. So at the point of sale. So the goods must be cleared in for free circulation in the EU already. Okay, there's no threshold, so you have to account for the VAT at the rate where the goods are arriving from the first supply. There is no UK registration thresholds, nothing like that. So you can register for Union OS, but obviously you don't have to. You can go for registrations everywhere, but that's usually not feasible. And then we have a non-Union OS. And for non-Union OS, for non-EU established businesses, it covers mostly supply of services. So it's the funny name, because non-union doesn't mean it's for people outside of union. It doesn't need to be. So that makes, don't get yourself fooled by the name, but non-union also is mostly for services. And we're going to touch mostly only on the TBE services. That means telecommunication, broadcast, and electronic services that are usually things like digital downloads, online memberships, sold to private individuals. And same with the goods, there is no threshold on those sales. So let us touch on services, especially the TBE service and services in general. If we talk about provision of services, so we have to ask ourselves a few questions, okay? Now, first of all, where am I, the service provider, established? Where am I? Am I UK? Am I EU? I usually know that because I'm the service provider. Then who's my client? Is it a private individual or is it a business? Okay. Is it a business? Where's the business? In Europe? Is it a VAT registered business? Okay. Where's the service taking place? As in, where's the supply of service, which is quite often, place of supply of service is quite often hard. Might be hard, might not be hard. And then we deal more into the electronic services. They are called digital services in the UK. So if you're a UK accountant, you will know them as digital services rather than TBE services. So we're going to then ask ourselves, is there a live human interaction or not? Because just a little fact of, let's say we have this webinar today. What service is it? Is it TBE service, is electronic provided service or not? Well, it won't be because we have live speakers. But if we just hand out your PDFs, then it probably would have been. So Alex made us a beautiful chart here. So of supply of business from the supply of services from UK business. So now let's talk about the human interaction, okay? So from where is the service taking place? So in our example, there is a human interaction. I am speaking, or at least trying to be eloquent. So from when does it take place? From UK or from the rest of the world, So is it from the UK? It is today. So who are our EU customers? Are they private individuals or businesses? Because obviously we talk in the context of providing them to the EU rather than in the UK themselves. So if the EU customers are businesses, then this will be a general rule service, and it will be most likely reverse charged by the recipient of the service, which means no VAT will apply, on this. But if it's a private individual, then from the UK, it's an export of services, but obviously the place of taxation might change. So from the rest of the world, it's the same, So is there human interaction? Now we go to no. There's no human interaction. Let's pretend there isn't. There's just an app. We didn't do anything. There isn't me speaking. We have to ask ourselves, are you selling to a private individual or business again? And if it's to individual, then non-union OS is applicable, because you have to tax it everywhere where you have to apply the rate of everywhere where your customer is located. And if it's a business, then it's again a general rule service. So it will be reverse charged by the recipient of the service. And a little bit about record keeping, documentation, and invoicing. Very, very funny topic, or not funny actually, but very boring, but yet very necessary. So you know what? The tax authorities audit, They do audit, and that makes no difference if you establish in the UK or not. If you have a VAT registration, the tax authorities can and will audit sellers, Depending on the tax authorities, it can be up to 10 years back when they're looking. They will mostly check irregularities. If you have a reclaim of any sort, so any monetary payments will be checked. So please, please, please keep all documents during this time, especially if you claim money, whether this is from import or some sort of domestic purchases. Keep every data, and preferably invoices for sales. This is because they will check whether the correct VAT rate applied or not, whether you declared or under-declared sales. And for VAT payments, some countries like Italy do actually only audit whether something was paid or not. Funny enough, they have a division for that. And also, there is also a fact that marketplaces, they do share, and they must share all the data with the tax authorities. So there is literally nowhere to hide nowadays. So what documents to keep? As I mentioned, sales invoices or transactional data, especially for OS schemes, same for iOS, transactional data should be enough. It does not need to necessarily be invoice, but for any other B2B transaction where the requirement is there to invoice, the invoice has to be stored. Purchase invoice, import and export documents. If you export goods as well, quite often transport documents might be required from the tax offices, so all that type of documentation should be kept. And for us, and actually all the iOS schemes, there are additional requirements, but like where the member state of consumption was, so where the goods went to, what was the quantity. It's similar information as you will have anyway if you're selling, because you know the VAT rate, for what money did you sell it, similar to what we collect on data. So that is actually a bit of easier, because data is easier to store than a bunch of invoices. And understanding import documents. So obviously in the UK, we have our lovely C79s, and we used to have C88s, which still are issued, but they have a bit of a different format. And similar to the UK, in the EU, if you import goods, please, please, please always keep the import documentation. Don't get yourself fooled, I would use the word, by your carriers and freight forwarders saying, oh, don't worry about the import VAT, we sorted it for you. That rarely happens. When they said, oh, don't worry about the VAT, they probably mean the import. They don't mean the VAT on the supply. Well, whether it applies or not is another story. Sometimes they would just give you invoice for VAT recharge, not the customs documents. You will make import to Germany, the invoice will be in GBP, that's not acceptable, and so on and so forth. So it's good to know what the single administrative document actually looks like, and that you need to have importer copy if you were the importer. It is necessary for VAT reclaims. You must use your EU EORI, okay, as an importer similar to the UK. So you must have one. If you as a seller do not have EU EORI, you have to obtain one for importing goods into European Union. It's a different EORI to GB1. No longer, the GB1 is no longer valid. But if you have a EORI from Northern Ireland, starting with XI, you can use it for importing goods into European Union. And yeah, hold on to these documents and keep them safe because you have to store them, because you will be checked. They will be checked at some point sooner rather than later. And they are very, very important. And we prepared like a list of common mistakes, or rather I prepared, of what happens with the invoicing. So we get a lot of questions, is my invoice correct? Or why can I reclaim this? And quite often the mistakes are, for instance, displaying VAT in wrong currency. Good example, you sell to Poland, and Polish VAT has to be shown in the national currency of Polish zloty. So it can be in euro, you can show it in euro, you can show it in pounds, but you also have to include the VAT amount in the national currency, and it's a good idea to put the conversion rate as well. So it's worth remembering in all the countries that do not have euros that this is obligatory in all of the countries, okay? In the European Union. Quite often using the wrong VAT number on the sales invoice is a problem. It's a confusion if you have 3, 4, 5 VAT numbers. Which one do I use? Okay. It will be specific on transaction. Quite often the one from where the transport of the goods began. So if the goods, let's say, went from Netherlands to Poland, the Netherlands VAT the VAT number should be used, but obviously it's all depending on the circumstances. One other one, number 3, is one that I actually came across rather often, where 2 UK businesses making deals with each other, saying company A, company B, they both in the UK, and say, oh, sold me this pack of pens. Yeah, I need a pallet of pens. Can you please deliver it to me to France? And business A does have a French VAT number. Business B, who provides the pens, has Netherlands VAT number. And so they are like, sure, no problem. Let's sort it out. Pay me X amount. This is the amount of GBP, whatever. And they put it on a return in the UK, which is incorrect, because the goods actually dispatched from Netherlands and went to France. So it makes a European transaction, and they no longer have to go on the UK VAT return because it's out of scope for the UK. So just because those companies are together in the UK making business, it will be, the invoice will follow the goods rather than the money. So company B will issue an invoice with the Netherlands VAT number, making an intra-community to supply to France, providing this company A will provide a valid French registration number, VAT number, and declare the acquisition. And yeah, that's where it's reported, not in the UK. And that happens rather a lot. There's confusion about the use of a reverse charge mechanism, whether it's domestic or just intra-community, because it's also reverse charge. And there are a lot of questions always about not using at all legal references, or using the wrong one for exempt transactions within the EU. Because, yeah. So I think it's now back to Alex. Yay.
Yeah, thank you so much. I know that this is kind of like a whistle stop tour through the VAT, and these are some of the common questions that we get from a commercial side of the business. So anybody coming into sales or our partnerships, any questions that we can typically get asked from our customers or through either accountants as well that we've worked with. So I've combined some of these to talk through. And again, if you have specific questions, you can either feel free to pop it in the chat to the right-hand side, or we can talk about them separately afterwards, because I know that there's a lot of individual bespoke cases. But we're going to cover off these common questions here. So first off, what are the thresholds for UK businesses for actually getting VAT registered when trading within the EU?
Yeah, I have to answer, does it? Yeah. There are none. There are no thresholds. You have to register with the trading with the EU. If the reverse chat does not apply for certain transaction, you will need to register.
Yeah, I think this is a really common one where there's a few numbers floating around, like 10,000 euros, or with the old VAT rules, with the distance selling rules, when you didn't need to, or there was specific thresholds. Ever since Brexit and the EU VAT reform, there are no thresholds for UK-based businesses trading within the EU. VAT is going to apply to every sale. This second question here, I'm going to cover off because we do get this question also quite a lot. So how do I record the EU VAT in my clients' accounts? So the EU VAT goes on the balance sheet as a liability to pay to the tax authorities. So when it's due, the client or yourselves pay it and then put the payment directly to the liability. So the EU VAT amount needs to be left off the P&L. Okay, so I just wanted to rattle this one off quite quickly, but it's an important one to make sure that everything is kind of matching up, all the payments are matching up within the accounts. So the next question we have is, how do I treat sales to Northern Ireland?
That is a very good one. It will depend where the goods are and what type of registrations do you have. Okay. If UK business sells goods to, we talk now private individual in Northern Ireland, then we have to ask ourselves, do they or do they not have IELTS registration? If they have IELTS registration, they need to inform obviously HMRC about this registration. And then we ask ourselves again, what is the value of my consignment? So in the EU is 150 euros. This equals to 135 pounds. If the consignment sold to a private individual in Northern Ireland for goods dispatching from the UK does not exceed 135 pounds and you have IELTS registration, this has to be declared on the IELTS. You cannot declare it on the UK VAT return. Okay. If the goods are above that, then they go on the UK VAT return. If they are sold to a business in Northern Ireland, then they go on a VAT return. They do not go to IELTS. Now, if the goods are in the EU, then it will be either covered by the marketplace. Depends who if it's sold on marketplace and there is no threshold. If you are, let's say, EU business, non-EU business, and for EU businesses, the EU business will have to account for the VAT, but it can do it on the OS. Union OS will allow them to tax those goods in Northern Ireland.
Thank you. So if the goods are sold to the EU, how do I avoid double taxation on exports and imports?
Now, let's start with exports because that's the easier one. Exports should not carry any VAT. They are exempt, okay? There are specific rules to it. That means that the goods have to be removed from the territory of the community, so from the EU. So that's why it's important to keep the export documents. Now, for imports, what it's meant with double taxation. So what we mean usually is what I already mentioned. Quite often, people will say shipping the goods and be like, no, we are your freight forwarder. We sort out the taxes for you, but they don't tell you which taxes. Okay, quite often they'll sort out the import VAT only, but we need to remember that there are two things to this transaction. If the goods are going from the, let's say, EU via the Netherlands, so they're cleared in Netherlands and they're going to private individual in Germany, we have two transactions here. Okay, three actually, if we consider the export also one. But there will be the importation, which carries import VAT, and then there will be the supply. Okay, once the goods are cleared in your name, you are liable for VAT on the supply, and that is where we say a double taxation. But technically, it's not double because you can reclaim import VAT providing you have all the necessary documentation, and so you will only be liable for the VAT on the supply.
Awesome. Thank you, Paulina. And another question that we often get asked is how long does it take to get VAT registered in the EU?
That will depend on the tax office, but it can be, I think, anything between 3 weeks to 3 months. Correct me if I'm wrong, Alex, but that's the timeframes I last time checked.
Yeah, absolutely. So I think this is definitely one. I know if you're working with clients and they're like, I want to trade tomorrow, and they tell you everything quite last minute, it doesn't give you a lot of wiggle room to actually get the VAT registration up and running. And those timeframes that Paulina have given are from the time that we send the documents off to the tax authorities. So we try to tell people, maybe don't start selling before you get your VAT registration number, so that you can make sure that you can document everything correctly. But yeah, what would happen, Paulina, if people wanted to start trading without their VAT number?
Well, they can, depends on the circumstances. Obviously, to import the goods into the EU, you will need at least the ERI number to start with. But let's say you want to purchase the goods in Germany from a German supplier, and sell it in Germany, you can start doing so. And you will need backdate your registration to the first supply, not to the first purchase, but to the first supply. And remit the VAT, but obviously there is a catch. There will be penalties and interest because you did not manage to register on time. There might be, but depends how long it is. If we're talking a month, then maybe not.
Yeah, absolutely. So I think keeping those time frames involved, like in mind when you are, speaking to clients about starting to sell internationally, and setting up the timings to really make sure they start their VAT registrations way long in advance, so that they have their VAT number and they're not just giving away money for free to the tax authorities. Perfect. I think those are the most common questions for now. If we just move on here. So we have created a lovely little takeaway guide for you. So this has a bunch of synopsis information, key takeaways from today, because I know that we have gone through a lot of the details quite quickly, but there's also going to be additional resources in there for you. So we've compiled some useful links to different EU VAT resources. We have a quiz on there that you can take to see what the outcomes might be, depending on how you trade. So there's lots of useful information, and there's also a list of the 2024 EU VAT rates, both the standard and reduced rated. So this is going to be coming from the partners at simplyvat.com email. So please look out for that in your inbox or your junk folder, just in case, so that we make sure that you get these key takeaways. I know, Michaela, you've mentioned that we were going quite fast at the beginning. So if there are specific questions, hopefully this covers it off. Or, as I mentioned, we'll be sending this link out so that everybody can always come back to it, rewatch. You can screen grab the flow charts at the beginning, because I know those are quite helpful to walk through the different scenarios. And if you have any specific questions or cases, you can definitely reach out to partners at simplyvat.com, and you'll get myself, and I will be able to answer any questions that you might have, and support you and your clients as they trade internationally. So I really just wanted to say thank you so much for attending today. We are just on the 30-minute mark here. So this, like I mentioned, is quite a quick whistle stop tour today. But we do have some more in-depth sessions coming up. So next month, we are going to be covering B2B transactions and the 13th directive. So if you want to sign up to that, the link in the description in this video here is available for you now, and we'll send it out afterwards as well. And then in March, we're going to be covering off the Import One Stop Shop scheme and really kind of go into a lot more detail then. So today was quite general, but we're going to be going into the specifics, into the theory around each of these different topics in later webinars. So we hope that you can join us during that time. And otherwise, thank you so much for tuning in. And thanks, Paulina, for joining today. And if you have any questions, please feel free to reach out. Thank you.
Thank you.